21st of December 2022. This isn't financial advice. Just want to go over a few sort of random topics. So the first one is the Fed put or lack of. So above all indicators and everything, sort of look at and talk about, probably the Fed put is the major one. So there's plenty of studies to show that we actually need a decrease in interest rates before we can really sort of get these markets going again. So and people are getting sort of a bit hopeful that the Fed was increasing, but at a slower rate. Yeah, but in fact, that's not a pivot. They're still increasing rates. We all know the story at the moment. Now, where they all end up, I don't know, but yeah, probably to get some proper fire in the market, we're going to need to see a drop in rates. So yeah, we'll just have to wait and see. In the meantime, we sort of just have to try and grind it out. I'm just hanging in there this year, learning, trading extremely small amounts of money, improving, waiting for better times to come. Just looking at the fundamentals, I've been looking at oil. I've been noticing it's quite a bit of smart money moving towards oil. So I've got Buffett, a guy called Danny Moses, who is in the Big Short. He was one of the analysts at one of those hedge funds who were shorting the housing prime. Another energy specialist called Eric Nuttall, who's a Canadian fund manager. I've been listening to a few podcasts on him. Plus there's others as well. So yeah, interesting. So inventories have been coming sort of down quite a bit. So there's literally just not a whole lot of supply around. There's been a big narrative against oil because everyone's going to EVs, but that doesn't necessarily sort of hold up, especially in the light of this whole ESG thing. So people sort of moving away from things like oil producers, trying to move towards more of a green future, which is obviously definitely the future, but we still need oil. Anyway, so that sort of led to a huge sort of underinvestment in exploration, new refineries, etc. So fundamentals pointing towards this sort of this big shortage in oil, and therefore a potential bull market in oil prices. Now, the problem with that is that'll sort of make sense. This sort of charts can really sort of help out. This is a weekly chart of the USO ETF. Now, I don't really see anything to get excited about there. It has had a huge run since 2020 when it just got obviously flogged. This was a time to obviously be buying it in hindsight, but yeah, it's had a big run from there. It looks like a double top sort of formation. There was a spike sort of early in the year when the war was sort of kicking off, and then sort of tried to go again. Classic sort of double top there. So it had like that sort of last gasp, and then sort of been rolling over since then. So now this is why I'm just trying to keep these sorts of ideas on the watch list, because if it does turn, there could be a lot of money to be made here. The thing with these commodity companies is that they're high fixed costs, so a jump in oil price can lead to a massive jump in earnings, and especially if there's very fixed supply, and you can't just turn the oil supply on very rapidly. So we could see sort of a big move in these stocks. Saying that, I do have that position in rig. Sort of an indirect position, which is an explorer, offshore driller. Now the fundamentals on this one do look actually pretty good. It's a bit not really sort of just like a sloppy chart there, doesn't it? But yeah, nice sort of pullback here after decent earnings, and again, it's sort of reading a bit much into this chart here, but the fundamentals look good. It's sort of been recovering nice. It's actually a pretty good performer, really, considering relative against the market. Pretty strong day today too. So I've got a mixture of short dated and long dated options here. I've got my short dated options in the market to sell, and they'll get sort of triggered around this sort of $5-ish level, which means I'll sort of double my money on those short dated options and pay for my longer dated ones. Anyway, yeah, interesting. So you look at some of the Buffett ones, Oxy. it's really sort of been breaking down now. Again, just need to keep this keep an open mind here. So is Chevron. Sort of just floundering in this space right at the moment. So yeah, nothing else to do at the moment. I'll just keep an eye on those. All right. Next thing I wanted to talk about is Bible gap up failures. There's just been so many, and let's just have a look at a few. What were some of those ones I was just talking about there? Star looks like a great little company. This one, laser eye surgery. Look, it's just Bible gap up there, and would have been a loser if I'd bought that. Apart from that, things weren't looking too bad there, were they? So just keep this off the side here. Wolf. Yeah, again, a little sort of momentum burst and flop. Suave. Same thing again, might have made some money there, but by and large, pretty much a pointless trade. Academy Sports. Big push here, bang, flop pretty quickly. Same thing here, another great, well, not necessarily great earnings, but a big sort of gap up here and then flopped. Deer, which is one I sold out of, which I'm thankful I did. Big push up, especially for a blue chip, and sort of just floundering since. The only exception has been, of course, solar. So look at that first dollar, for example. But that's what you've been in. So what's happening there is people are using those gap ups as an opportunity to sell into. So yeah, this is just another hallmark of a bear market. I think that's pretty clear at the moment. So yeah, obviously trying to be very cautious, and especially like I'm saying, don't fight the Fed, and the Fed wants lower prices at the moment. So the other sort of just few final points is look at the put call ratio. This is just all over the place these days. I don't know what's going on, but at the moment it's actually showing it's sort of not very high, despite the market being shit. So yeah, things are just being sort of sold off in a sort of somewhat orderly manner. So, which kind of leads me to this sort of last point down here, which is not really seeing any sort of capitulation at all at the moment. So yeah, which we really want to see. We're just seeing a sort of orderly sell-off. Things like Tesla that have been sold off in a fairly, actually, to be honest, a pretty orderly manner. Which the narrative on Tesla is that it's all Twitter related, but that's a narrative, and that's an easy narrative to sort of to buy, especially if you're bullish on Tesla. But I don't know. It just looked like it just a stage 4 decline to me. So, and then the last chart is the percentage of Nasdaq stocks trading above the 50-day moving average. Remember we talked about it here, we're sort of getting up to these dangerous levels. Remember I was saying I didn't think that was so bad coming out of a deep correction. I changed my mind, which is a good thing, and to see that's sort of coming down. Now we're still nowhere near these sort of very oversold levels, so we're not seeing capitulation where the put call ratio isn't particularly out of order. This is an oversold, so if we are in like another flush phase of the market, we are nowhere near the bottom just yet. So yeah, I'm just hanging tight at the moment, doing very little, doing plenty of research in other areas, looking for where the next sort of big area might be moving. So for example, that might be oil. Look at that sort of big picture stuff.